Hey everyone, Daniel Betancourt here with Remax Town Center. Wanted to try something new today. So I want to start doing like a Q&A and do it in this Facebook format. So hopefully some of the followers of this page will get some benefit from that. I know I'm getting regular inquiries about homes that I'm posting on the videos. And some of the buyers have questions about home buying, and I also send out this page to a lot of my customers. Some of them are buyers, some are sellers. So I'd like this to be a resource, and hopefully you get some benefit from it. So hope you're having an awesome day. It's a beautiful day outside. And this morning I got a question from a buyer about different types of home purchasing programs. So I wanted to talk about a couple of those just so you have an idea of what they are. And the first one, when you're buying a house, the different types of loan programs that are out there available to you, one of the most common ones is an FHA program. So FHA, some people call it a first-time home buyer loan, but basically an FHA loan is one that's insured by the federal government, and it's the type of mortgage that you can get into a home with the lowest down payment. So right now, FHA requires a 3.5% down payment. So for every $100,000 of a purchase price, you have $3,500 as your down payment. So if it's a $200,000 home, you've got a $7,000 down payment. And in addition to that $7,000 down payment in the $200,000 example, you're also responsible for some buyer closing costs. So your buyer closing costs will vary. That's going to depend on your lender and what part of the year you purchase in, because property taxes and homeowners association fees also impact your closing costs. Some of those closing costs can be negotiated, and maybe the buyer can get some assistance from the seller. And with an FHA program, a buyer can also receive a gift from a family member or friend to cover the down payment. So that's the FHA program. It's good, I believe, up to $270,000. So you can still get an FHA loan if you purchase a home over that price, but you have to make up the difference in your down payment. So for example, if you buy a $500,000 home with an FHA loan, then you'll need $230,000 as your down payment rather than the 3.5% down that is their minimum requirement. So the other type of loan program is a VA loan. So VA loan is a great loan for veterans and military veterans, and that requires zero down payment. That's one of the huge benefits of a VA loan, and you don't have to pay what's called mortgage insurance. And with a VA loan, as long as you qualify and you're eligible, you can purchase a home with zero down, but you will still have some buyer closing costs. So that's another option that's out there for you. The most common type of loan is a conventional loan. And so I didn't mention earlier, for the FHA loan, you have to, with an FHA loan, you have to be a first-time home buyer, and to be considered a first-time home buyer means you couldn't have purchased a home in the last 3 years. So if you haven't purchased a home in 3 years, you're a first-time home buyer. And but for the conventional loan, basically anyone, if you're a homeowner, you can purchase a home with a conventional. You can purchase a second home with a conventional. The minimum down payment for that is 5% down. And there is mortgage insurance if you give less than 20% down. The best way to get rid of mortgage insurance is to purchase a home and use at least 20% down. And then there's a USDA loan program out there, which is basically the home has to qualify. It has to be in an area that at one time in the recent past was mostly agricultural. It was a loan that was designed in the old days for farmers, to help farmers. But nowadays they still offer it. And most of Central Florida is suburban or urban, but there are some rural parts and there are some suburban areas that are still classified as rural according to the USDA. So a USDA loan would work in those areas. And in those areas, you can also purchase using 100% USDA loan with no money down, but there are income limits. So if you make too much, you won't be able to get a USDA loan. And then outside of those, then certain lenders will offer portfolio loans, which are basically, those will vary between lenders. They kind of make up their own rules, whatever they're comfortable with. So a buyer might use a portfolio loan if none of those other types of mortgages fit them just great. The lender might offer an alternative option that's exclusive to their bank or their lender, and it's one that you can explore. But most buyers use one of the ones I've already mentioned. So if you have any questions about real estate or mortgages, I used to work in the mortgage industry, and I've been in real estate for 14 years. So I've seen a lot. And if you have any questions, please put it in the comments below, and then I'll take an opportunity in the future and answer your questions. So I hope you enjoyed this. If you'd like to reach me, my phone number is 407-375-9142, or you can send me a message through Facebook or comment below. And I hope you have an awesome day. Take care.